Kelvin, you've traded in crypto. Okay, that's good. That's nice. So for this session, we're going to be looking into SQL data analysis. And for our case study, we're going to be analyzing Safaricom stock prices for the period between 2012 and 2019 June. And before I explain what stocks are, let me give us a little bit of background and a table of content. So the objectives of this session are: one, to use SQL queries to understand and analyze Safaricom's historical stock prices. And we also want to learn advanced SQL techniques for data analysis. And this includes subqueries and nested queries. If you've been in the Excel class, we talked about nested functions. So it's nothing different from nested functions. So we're going to look into nested queries or subqueries. We're also going to look into window functions. We're also going to look into common table expressions, or what you call CTEs. You'll see them in the course of the lab session, and I'll explain exactly where they are in the course of the lab session. And we are also going to identify and calculate key performance indicators. We have a scenario that we're going to be looking into, we're going to work into, because remember, again, in data analysis, we normally start from, gathering the information for our analysis. And yeah, so the other thing we want to, no, I've just noticed this is not shared fully. Let me reshare. It's acting up. If I share my entire screen. Okay, let me just share my entire screen. Sorry for that. So we wanted to look, we were looking at what the management of Safaricom wants from us as the data analysts. Now, one, they want to understand the market trends. They want to understand how the Safaricom stock prices have fluctuated over the past 7.5 years. And they want to know if there are any seasonal patterns, long-term trends that can be identified from our analysis. That is one. Second, they want us to understand they want us to conduct a performance analysis. They want to know if there's any average, or rather, they want to know the average opening, closing high prices during this period. And we are getting to what closing high, low, and those things that we've talked about are in a few. So they also want to understand the key metrics that will help gauge the overall market sentiments. The other thing that the management wants from us is to identify the volatility and risk of their stock prices. So they want us to understand how volatile their stock price has been. And we're going to do this by analyzing the standard deviation of the different indicators to give us a picture of the risks that is associated with investing in Safaricom. The other thing is we want to look into volume insights, and we want to see if there was a correlation between the trading volume and price movements. And this is because higher volume days might indicate periods of increased investor interest or market activity. And then we also want to look at extremes. We want to look at the different price spikes or dips, and also know the dates that correspond to these prices associated with the events that we've identified from here. Now, if you have the data set, and I'm hoping that all of us have the data set, if you haven't, you can check the description box. And the data set that we have is daily stock prices for Safaricom from the year 2012 to June 2019. And the columns that we have here are ID, date, open, high, low, close, volume, and percentage change. That is in prices, in trading prices. And I'm explaining what all these in terms of stock trading in the next slide. So yeah, the file is stored in a .csv file, and we've called it Safaricom stocks.csv. So you can check that if you've downloaded it from our repo. So key financial terms. In the world of finance, stocks are normally a way for a company to raise capital. And they normally do this by issuing shares, which people buy. And we have common shares and preferential shares. And common shares are normally those who hold common shares normally are allowed to vote within the company's annual general meeting. And those who have preferential shares normally don't have any voting rights, but they're normally given fixed dividends. If you know what a dividends is that thing that you normally, it's normally the profit that you gain from the stock or the share that you hold within a company. And so preferential shareholders normally get fixed dividends. They normally get these before, the common shareholders get theirs. And the preferential shareholders normally don't they normally get their fixed dividend whether the organization had a loss or a profit. And that is just by the way, we're not going to be looking into the different types of shares class. So as we've defined here, in the world of finance, a stock, also called a share, represents a unit of ownership in a corporation. So when you buy a stock, you're essentially purchasing a tiny piece of the company. And normally in stock trading, if you look at the NSE website or Yahoo Finance, if you're interested in global stock trading, you realize that stocks are traded every day, except for weekends and holidays. Having known that, so in our column, in the stock columns, we normally have some indexes and all that, but let me focus on what is in our columns here. So we have open. So open is normally the price at which the stock starts trading when the market opens. And the NSE trading hours are typically from 9 a.m. to 3 p.m. African time. So the opening price is what, when you log in to trade on in your trading platform, the opening price is what you're going to get when you start trading at 9 a.m. And normally, when people are trading in the course of the day, the stock prices normally go up and down. They normally have these two lines that goes up and down, and it's some curve. So that is why we have here low, high, and low. So the highest price is the highest price the stock reaches during the trading day, and low is the lowest price the stock reaches during the trading day. So as I've said, prices normally go high and low. You'll start with the opening price, but then the prices are going to be fluctuating throughout the day until you close. So close is the price at which the stocks end trading when the market closes. So I hope that is home. If you have any answer, any questions, you can ask. If I'm being too fast, you can also let me know. I'm checking the charts. I have the charts on my phone, so I'm checking that regularly so that I don't leave anyone behind. Now, the other thing we have is volume, which is the total number of shares traded during the day. So in the course of buying and sharing, we, as a company, we need to understand what is the total number of shares that was traded during that day. So we have that. And then change is the change. The change percentage is the percentage change in the stock price from the previous trading day. So it's the percentage change in the stock price that is now the closing price from the previous day. If you look at NSE right now, you'll realize that Safaricom has a negative, by the time I checked, that was like 30 minutes ago, Safaricom has a negative. Thank you, Kevin. The price was a negative 1.7%. That was the percentage change. So you can go and look into these things after this session, so that you can also start investing as good citizens of this country. And for your own financial literacy, you can go check those. Or also even for your career purposes, if you want to invest in financial analysis or get into the financial sector, if you want to get a job in some of these things, it would be good for you to understand some of these things. So the other thing is moving average, and it's not part of the columns, and we're going to look at it, but it's normally a technique that is used to continuously calculate the average price of over a specific period of time. And normally we use moving average to smoothen our prices. And how this is done in normal terms for the analysis, we normally use a moving average of either 50 days or 200 days. And how you do it is average for the last 50 days. If I move forward to the second day after day 50, that is day 51, we are going to get rid of now the first day. We're going to look at day 50 days from the day that we are in right now. I hope it's clear. We're going to be looking into a 7-day moving average in our analysis, and that is why I think it's important to get into that. So I think now let's get to our lab. So are there any questions, anything you'd love to understand about stock trading before we get into our analysis? Any questions? Okay. There are no questions. So I guess we can continue. So I'm waiting for you guys to open your workbench. I'm hoping by now we've all installed MySQL. And if you haven't, if your MySQL has been having issues, or if you have issues with the first session, that is the SQL basic session, just reach out to me. I think you all have my number. If you don't, check the WhatsApp group. I'll raise my hand in the WhatsApp group so that you can reach out. Now we're going to start by creating the database. And because I don't know the exact name, we named it stock analysis. So let me just write our, sorry. Well, let me just copy because of time. Or let me just run it from here. So the first thing we want to do is we want to create our database for stock analysis, because I'm assuming that this stock data was sent to us, from a file, and that is what we're doing here. And so the first thing we want to do is run this first query, this first statement, and we do that by using this. Yeah, and our database has been created for us. You can see it down here. So you just come here, refresh, and now we have stock analysis here. So to activate it, we can either run this or just come here, click it till it turns black. But let me just run it here. So yeah, you see it has been boldened for us. So after we've highlighted the database that we want to use moving forward, the next thing I want us is to create a table in which we're going to import our data. So before I run this query, let me just explain what it is. So the statement or the query for creating tables is this one that I've highlighted, create table. And the table we are creating here is Safaricom stock prices. This is the name of the table we are creating. And we are giving it, the first column is now our unique identifier, which is why we have set it as primary key here. And it is the ID, and it's an integer. This is now the data type. and we'll be auto incrementing. Now, this is us assuming that after we've uploaded the first data set, we might want to maybe link this database to a what do I call it? To a backend somewhere, or to a system somewhere that now automatically inputs this data into our database. So what we are telling MySQL is that if that, in the case that happens, it's going to auto increment the IDs, and these other ones is just going to take them as is. So the next column we have here is the date column, which is in the date data type of the data type. The next one here is the open column, which is a decimal, and why we have here 5 and 2. 2 is limiting the decimal points, and 5 is the numbers. And now high here is also a column, and it has the same data type as open, and same as low here, and then same as close. And then now we have also the volume, which is an integer, and this is because the volume we're going to give it in millions, and then the change percentage is also in decimal, but we're having it in 4 decimal points because the percentage change is if you check our data, it starts at somewhere at the third decimal point, which is why we have it that way. So the next thing I want us to do is come to the tables here, right click. No. Oh, let's run it first. Sorry. Let's run this query. You can just run this particular query by clicking on this one that executes the statement under the cursor. And you see our table has been created for us here. So let's just refresh. And now we have the table here. So come to the table. Okay. Somebody's saying I'm lost. How do I get my info to appear there? Thanks, Agnes. Now, to upload your script, sorry, I should have started with that, but I didn't because I already have my script here. To upload your script, come here to this one that looks like a folder. I hope you can see my cursor where it is. And then click on it. And now you can upload the script. You'll just browse to whichever folder that has your script, and then you can click on it and open. Except I already have it, so let me just cancel. But that should bring your script here. Sorry for that. Mori is saying I should explain decimals. Okay, but I think I've explained that. Agnes, you can confirm if we are together. Mori, yeah, I was saying now this one, the decimal 5 to here, this one just tells this one just sets the amount of values we want in this particular column, and we're saying we want the numbers to be like 5, and then now rounded to the next two. How did you say it in maths? To the next 2 decimal points. So like if say we have 10.5.5.6, it's going to be rounded off to 10.5.6. Yeah. So I think that is clear. We'll continue. So after you've successfully created your table, come to refresh here, and then come to the tables and right click on the Safaricom stock table that is under the tables. And then I want you to come here to table data import wizard. Once you do that, we'll browse to the folder that has my table, and it's somewhere here. And I think it's Safaricom stocks.csv, and open that. And then click on next. So we want to use an existing table. So you're going to click on use existing table, but you can choose to create a new table. But because you already created that table and already set rules for it, use the existing table. So click on next. The next thing you're supposed to do here is match your table columns to the columns from the data set. And now our ID corresponds to the ID here. The date corresponds to the date, which is okay. Open corresponds, high corresponds. So I think everything in our table here corresponds except this one up. So I'll just rectify it. So you ensure that the columns that you set in your table when you're creating it corresponds to the exact column where your data appears in the file that you're uploading. So and you can do that. You can confirm that by just checking this one here that highlights it. I hope you can see it. So I'll click on next, and now you'll be being told to click next to execute. So let me click that. Okay. So it's given us an error. It says here that the clause specified twice. So I'll go back and redo that. And now, yeah, you realize here we have clause here twice. So I'll just change it to low. And I think it's because I was highlighting here. That's why it has issues. Yeah, now it's working. Bradley says he's getting an error. In position 0, ordinal not in range 128. Okay. Okay, what is error that Daudi is encountering? I think it's because of our data is loading, as our data is importing. It's because of I think the rules, or rather the data type. So I'm thinking it could either be an issue with your in position 0, because this is position 0 is now the first column. So maybe let me handle that later. Allow me to handle that later, because I'm thinking it's your first column, but I don't want you to up your code. So but maybe you can counter check your data types and ensure that they correspond with the data types to the file within the data file that we have. Kindly do that and get back. And I think we've finished here. So yeah, you can see that we've imported 1753 records. So let's just finish. And yeah, now we can just check. We can just check our data set to confirm that everything has been imported. So select all from Safaricom. Good. Now you can see how here. Okay, thanks, Daudi. Just check, and I look into it. If it persists, we look into it. We look into it together. Now you can see our data has been uploaded, and now we have ID here, date, open, high, low, close, volume, and change percentage. And in our data analysis, in our steps to conducting data analysis or framework, we say that the first one to do is explore our data. to know the data types and just understand our data. But I think we already did that because we already know what this comprises of. Yeah, we already know we have data here of the open prices, the high and low prices during the day, the close, the volume, and the percentage change. So the thing we want to go into is descriptive statistics. We want to summarize some of the statistics here and see, one, look at the measures of central tendencies, look at maybe the minimum and all that. So let me just open the script so that we do that. So the first script you want to run is this one, and we want to explore our data and see when is the earliest and latest date. And yeah, that one, we run this first one. Let me just copy exactly this one from here and run it in this file. So this one will just tell us when our data, when our trading starts and when the trading ends. So yeah, we see here the date starts on June 2012, which actually contrasts with what I had said earlier, because I had said it started with 2012. So in my mind, it started from January, but we see here that it started from June 2012 to June 2019. And of course, the total number of records we have is 1753, which is correct. The next thing we want to look into is now the summaries, and that one is looking to the average. So let's look into the mean. You can call it mean or measure of central tendency. Murray says his date column is zeros. Wow. Anybody else having the same issues? It was interesting. Kindly share your file data to WhatsApp, in the WhatsApp group, so that I see why it's zeros. Let's check it. Yeah, share both your file data and the SQL results, so that I see why it's at zeros. So we continue with the averages as Maury sends that. So I'll just run this. And now here we're going to be using the average function, which is denoted as AVG. And it's going to be using that function from MySQL. And we're going to be looking at them and using aliases. Like we're going to be looking at the average of the openers, average AVG open, and so on and so forth. So let me just run that. And now you can see here, we have a summary of the averages here. So the average for opening price here was 16.79. Let me just write that somewhere. And then for the highest, the average for the highest was 17.0, call it 0.6. And then for the low was 16.78. Volume is what? This is 1,156,067. Oh, that's 11,056,780 points, that one. And then now the average change is 0.0013. Now you realize these ones are, the decimal points are quite numerous, because we haven't given any restrictions for the rounding, but that's still okay. So the next thing we want to look at here is the minimum and maximum values. And what we're still doing here is just exploring our data set. So Yeah, so the minimum opening value is 0.00. And I guess this was the opening price for the first date that we looked at. And the maximum opening price is 32.75. And then for the highs, the minimum is 3.45. And then for the maximum is 33.50. Then we have that for the low, again, is minimum is 3.35 and maximum is 32.50. And you can look at these and you can counter check this with the averages, and it can really tell you that there's quite a high volatility in these prices by just looking at how these minimum and maximum prices are deviating from the averages that we had. So we move on to the next statistics that we want to look at. And of course, here we have the minimum traded volume is this one, and then the minimum trading volume is this is 123 million. And you can see how much these ones are deviating again from the mean. And now these statistics again tell us can give us an insight into the market, can give us market insights into what the market looked like in those days where the trading volumes was high or where the trading volumes was low. So let's go ahead to the next script that we want to run here. Is now we want to look at the volatility. We want to look at the volatility. The first thing that we're looking at here was just telling us the market trends. Okay, let me check what Mori has shared. Okay. Someone is saying that tabs are not active, they can't run anything. Yeah, that could be because you've not connected to a server, and I don't understand why Mori's dates are zero. Have you checked the file itself? Can you check your dates in the file kindly before we rule out before we see if it's an issue with the formatting, with the rules in MySQL? Kindly check the file. You can check the file on Excel and just counter check if there also the data are zero there kindly. And yeah, so we'll continue. So the first thing we looked at here when we're looking at the averages here and here is we were trying to look at the market trend, and which is why we're looking at the maximum and the minimum. That gives us an insight into the market trends and gives us an insight. And now we can counter check the exact dates where and we had those maximums and the lows, and now try to as we can ask the management can try to look at the other factors that affect the stock prices and try to understand exactly why there were lows and why the market favored them at the times of the maximums. So we can look into that. Now the next thing to look at is now the volatility. The volatility and so let me just copy that. And now for the volatility and risks, sorry, I didn't explain the mean and maximum. These are inbuilt functions. So you just you write the function and then input a column you want to input here, and then now this as just tells us that we want to display the column name differently, because now when you come down here you realize it's the minimum of the open has been saved here as min open. And if we didn't give this alias or s, you'll forgive me for that, it's going to just return it as open, again open there. So the next thing we're doing here is now we're looking into the volatility and risks of our stocks here. And for the volatility and risk, we're looking at how much the prices spread from the mean or from the average. And we're doing that by using the standard deviation function, which is this stddev underscore pop or pop. And yeah, let me just run that before I explain something. So normally, the higher the standard deviation, the higher the volatility, and the higher the risk. Yeah, higher standard deviation means more volatility, and it means more risk. So we see here that now for the opening prices, it deviates from mean by 7.69. And then the high deviates from the mean by again 7.7. Now the low again, that one. Then now we also have the volume also deviates by that one. So this typically tells us that the prices over the last 7 years now from June to 2019 have been very volatile. And it means that there are some days when buying the Safaricom shares are very risky. There are sometimes when the shares are bought at very low, and there's sometimes when the shares are bought at very high. But that is the insight we can gain from that. That the prices are the higher standard deviation means higher volatility, which higher risk. So the next thing we want to look at is we want to look into the market trends. And for looking into the market trends, we want to look at the average closing prices for each month, and then again for each month per year. So I'm explaining the program. I'm explaining the query. Let me just copy it first. So for the market trend, we're going to be using two indicators here. One, we're going to be looking at the average closing prices per month, and you're also going to be looking at total volume of stocks traded each year to look at the market trends. We want to look at whether the prices, Safaricom traded more in stocks as the years went by, or if in some years their tradings went low or something of that sort. So in case I lose anyone, kindly just let me know. Push this down. Good. Now, so we want to calculate the average closing price for each month and order the results by month. And we're doing this to remember the management also wanted us to give them some market analysis. So we will be selecting. We're going to be using the date format. This is also an inbuilt function, and you're going to be selecting the date format from the date column, and you're going to be selecting the year and then the month, which is why we have here. These are just variables that tells us that now we're going to be selecting the year and then the month, and we're going to be doing that as month. And yeah, as you said, yeah, we're going to be formatting the date as year and then month to group by month. So this here explains this part. And from the date column, we're going to be selecting the average close as average close, and we're going to be grouping these into months. Yeah, so we are calculating the average closing price for each month. And of course, this from just tells us the table that we want to select it from, and you're going to be grouping it by month. And then we're also going to be sorting it by using the order query or clause, and you're going to be ordering it by month. We could also just tell it here to order it by ascending, yeah, but we can just leave it. But let me leave it at that and now run this. I hope we are together. Yeah, and now we have our results here, and it has ordered it in an ascending. It has sorted it in an ascending order. So we have June 2012. That is the average close for June 2012, the average closing price. And then so now what we have here, if we also to the visualization, we'd now use our time series to visualize this, and it will tell us the trends. But now sadly we're not focusing on that here, but I'll ask the tutor who will be taking us through Power BI to use this data, if that's okay with you guys. You can share in the comments if you'd love him to visualize what here in Power BI so that you understand more in depth what we're doing here via visualization. So here we have our results that has averaged the closing prices for all months. Yeah, it has averaged them per month, and it has grouped them again in the month, which is why we have this date format here. So I think that is it. It has given us whatever, and now this will be really beautiful if you are visualizing, but that gives us a market analysis. But if I just look at it, you can, let me expand this. Yeah, you can see here that the average closing prices have been going up mostly. Yeah, but you can see here between June 2013 to between April 2013 to June 2016, there was it rose and then it declined. And let me see, when did we have our elections in these years? I think it was 2017. Okay, elections were in August. Is it in December? I think it was in August. Yeah, so you can see here the way the prices are fluctuating. You see here there's a 20 and then it averages to 19, 18. You can use this to look at the market and look at the different months. And now you can correlate these to other factors that affect the moving prices of stocks, such as maybe management decisions, because we normally know, or rather, when normally prices normally tend to go up or down after a company has shared its financial statements for the year. So if people maybe analyze the financial statements and see that the company is doing good, is doing well, they'd want to buy. If people analyze and realize, Safaricom is doing poorly, we might want to buy our shares. So that normally happens. And then again, now these prices are normally also determined by the dividends. Dividends are given to the shareholders. So there are normally other factors that might affect the prices of these stocks. And there's something in finance we normally called, is it management decision? Yeah, or corporate. Corporate decisions. Yeah, corporate decisions also normally affect stock prices. So I think that is that. Let's move into the next indicator, which is now we're going to look at the total volume per year. And this is our query. If you have any questions, kindly share. Don't allow me to move without and leave anyone behind. And for Bradley and Maury's cases, I will sort them out. Okay. Now, Maury, I understand why your dates are 0. Let me just sort that. Now, MySQL doesn't understand that format. You realize your date is having is a backslash. Yeah, it's supposed to be having the dash. You can see here. Let me just select before we get this. Let me just show you what it should look like here. Let me select. Our column is called date. From Safaricom stock. So this is for anyone else that might be having issues with the dates. Safaricom. You can just check what Mori has shared so that you understand what I'm trying to explain here. Stock prices. Yeah, let me expand. Now you realize the date format that we have here is different from the date format that you're getting when you try to upload the file. So what you can do is you can change that in your Excel file. You remember the replace shortcut that we used, Control H, and then select that particular column in Excel. That is, select the date column in Excel, Control H, and then replace this. Is this forward slash or backslash? Yeah, replace that slash with the dash that we have here, so that you can now successfully import your file. Kindly do that and tell us if it works. But I know it should work. So I think that is one issue sorted. So we still have Bradley's issue, which I will sort. So Mori, kindly and let us know if it works. Yeah, so the next thing we wanted to do in market trends analysis is, understand the total volume of stocks traded by the years. So let me just run this. Sorry. Yeah, now we have the total volume shared. And this will really, again, make so much sense if you are visualizing. And to visualize, I would have loved to use Python and use some of the libraries there, but now we are not handling that in this class, so we'll just pass. So, but we can just look at these trends. You can see in 2012 they had 14 this billion. Yeah, in the first year they had like 14. No, 1 billion. This one was like 3 billion and 9. That one, and then now in 2014 it declined. 2015 the volumes declined a little bit. And they've actually been declining. Interesting. Yeah, that would be really interesting. Yeah, because now the volumes traded have been declining since what? Since 2017 they traded very high volumes, and then so there could be a reason for that. So our work would be to look into that, tell them, and then now they can try figure out why and do the whatever. But again, as I've said, this would make total sense in visualization. But here we're just learning how to do this using SQL. So again, the syntax resembles what we did up here when we're looking at the average closing prices for the month. So again, we are selecting the format as year, and here we're just selecting the date, and we are formatting it as in this, we're giving it this year format, and then we are summing the volumes as total volume to calculate now the total volume stated for each year. And then we are grouping by year and ordering by year as well. So yeah, I think that is that. The next thing we want to look at is to calculate the 7-day moving average. And here, let me just copy the query first. So in calculating the 7-day moving average of the closing price, as I had explained earlier, the moving average is simply, we are simply calculating averages in a particular day by averaging a select number of days before it. So it could be, here we're using 7-day moving average, but it could be 50 days, 200 days. And this is normally used to smoothen our analysis and also to be able to clearly get patterns within the days, also to understand for easy visualization as well. So here we are selecting the date and of course the close column, and we are averaging the closing price over. Now this is what we were talking about, the nested queries, and this is actually a window function. Yeah, so we are ordering by the date in the rows between 6 preceding and current row. So we are averaging the rows between the 6 preceding days and the current row. 7-day moving average from the analysis of the 50-day moving average. Now this one we're looking at 7 days before that current day, which is why we're looking at we're looking at 6 days before the current day, which is now the current row we're talking about is now the day. Yeah, and we are averaging the close, so that we are looking at the moving average for those different days with that particular criteria. I don't know if that is understandable. Are we together? Maybe mnaweza niambia kwa comment section if we are still together or if I've lost anyone. Again, I don't want to lose anyone, so I will wait. Are we still together? Is there anywhere anyone would love me to reiterate or to go over again? Okay, Kelvin is saying we are together. Anyone else? Are we together? Are we together? Je, tuko pamoja? Ama kuna hali mngependa nirudie? Ama I don't know the Swahili word for it. Ama I re-explain. Okay, I'll assume that we are together. So yeah, let me run this and see what we have. And you can see here, so we have the date, we have the close, and then we have the 7-day moving average. So this one somehow, this 7-day moving average somehow smoothens the data for us, and you can see the pattern. Yeah, it will, if you are to visualize this, it's going to give us a smooth pattern. And yeah, in the future, I'm going to be having a stock market analysis using Python. So you could sign up for that class. We will visualize that. We'll look into that. But as I've said again, I'm also going to talk to the instructor handling Power BI to perhaps use this data, because I find it interesting and I find it very informative. And I find it to be something that will really look good on our CVs. So I'll be having a stock market analytics Python class, maybe hook or August. So I'll share with you guys. I'm still working on the class. So yeah, you can see now we have our moving average here. And normally you can export these to external files now for visualizations. And maybe let me just save this as moving average. And yeah, it will be saved as a CSV. And now I can go look at it and visualize it. And you can also connect this to Power BI, which we will do in the last session. We will be handling the last session with the Power BI instructor. Will help you, will be helping you connect this to Power BI. So the next thing you want to look at is we want to identify extremes. And remember, if you look at the slides, you'll realize now we were told to do that. And to identify the highest and lowest, to identify extremes, you're going to be looking at the highest and lowest stock prices along with their corresponding dates. Now, this can be used again to try and understand what might have occurred for us to be having these extremes, and it will also help inform decision making. And in this query, we have nested. We have the it's nested, and get to it. Yeah, so we are here identifying the highest and lowest stock prices along with their corresponding dates. Now is what we call I'm looking for the name. This is what we call a CTE, common table queries. So here we are using this with and with price extremes. Now, what we're doing here is we are creating a temporary variable or column that we are going to use in another query. Yeah, because you realize that we don't have these price extremes in our columns. Yeah, so the width here is we're using it to temporarily create a variable, and this variable we're naming it price extremes. And now this is now the alias we're giving it, and we are now giving it values here. So we are saying in the price extremes here we are selecting dates, high and low, and we are ranking them. Yeah, and we are ranking them over, and we are ranking them over an order. Yeah, and the first rank is we're ranking the prices with the highest values, and then we're also ranking prices with the lowest value. The ones with the highest values we are ranking in descending order, and the ones with the lowest values we are ranking in ascending order. And we have that as high rank and as low rank. Again, that we're doing from Safaricom stock prices. Even says we came across an unbounded preceding and preceding. Maybe you can give me a context as to where you've come across that. Is it in stocks? Is that? Because I sijarada bado. So once we have created this variable, or rather this new placeholder called price extremes, Now we want to select the dates, high and low, from price extremes. We are using it here, where the rank equals to 1 or low rank, high rank is equals to 1 or low rank is equal to 1. And I think we can understand how that logic works. And now you see our output. So when we say here where the high rank is 1 or low rank is 1, is remember here we were ranking the highs in descending order, yeah, and lows in ascending order, which means the ones that we are ranking in descending order, it means that the highest high is going to be at the top, and it's going to have the first index, or is it the second index? Yeah, that is why we have here high rank equals to 1 and low rank, or low rank equals to 1. So, and of course we've used the where clause here. Now I hope you understand how that works. So we have our output here. So in 2012 June, we have the high and low. So we have extremes. Now we're looking at the extremes. So we have again 12 June, 11th, 13th, 14th, and 28th. And then again we have extremes in 2018, April 5th. So I think that is home. So in understanding these extremes, we can go back to our, books and try to understand that maybe in this day in history, what was happening within the market, or within the corporate decision making, or within our company. So, or now with Safaricom for this case. The next thing we're looking at here is which is actually the last query we are running. Oh, interesting. This was fast. So the next thing we are looking into here is we are trying to find dates that had trading volumes higher than the average. And these are still in trying to identify extremes. You've looked at dates that had high and both the high, where the highest trading prices were in the extreme, and the lowest trading prices were also in the extreme as well. Yeah. Now here, the highest trading it was in extreme here on 6th, on 11th of June 2012. On 13th, it was also very, the highest trading was again on the extreme. And here, the highest trading again was 33.50, and the lowest here was 32.50. So I hope that makes sense. And maybe we'll be able to put this into, we're going to convert what you're doing here into insights in the next class, Power BI. So the instructor, I'll talk to the instructor to make sure that he does that. So in also identifying the extremes, we want to look at the dates that had volumes that were trading above average. Remember, we had calculated the average in terms of the volumes and even the other columns as well. So let me run that. And average is normally what just tells us the center of our data, the mean of our data, or the central. It's normally called measure of central tendency. So I hope that makes sense. So all these dates, how many dates are these? Yeah, all these dates had above average trading volumes. And now we can use whatever we have here to again derive some useful insights. We can also look at dates that had below average volumes. You have to look into extremes again. So let me just manipulate this one to tell us below average, and then now we want to make the volume less than. And you can also realize we've also used nested queries here, because this query is nested within another query. So I think we have covered. Yeah, and now we have the dates that traded below average again here. And I think I'd written our average trading volume here was 1,156,000. So you realize these ones had below average trading volumes. And now just to go back to our PowerPoint to check if we have answered everything that we were supposed to answer with our queries, though now we haven't visualized for the company to understand, but at least we have seen how we can do this using SQL. So the first thing we wanted to do was look at market trends and see how the prices have fluctuated over the past 7.5 years. And I think we have done that. We have done that by yeah, so no, I think that was named differently. So for the market trends, we were to look at, for the descriptive statistics, we were to look at the earliest and latest trading dates, which I think we have. And this one to just understand the time span with which we were working with, and we realized we were working with trading prices between 2012 June to June 2019. And then we also looked at the count of records to know the number of data, and we realized there were 1753. And still under descriptive statistics, that was just exploring our data. We looked at the average prices so that we understand the general price levels, and we've realized these average prices have actually helped us in identifying the extremes later on. And here we use the mean function, the max function, and the average function. And for the mean function, you just use it to know the minimum prices. The max prices, the max function was used to understand the maximum trading prices. And then the next thing we looked into, I think, was market trends, which were where we were exploring the average closing price per month. And here we used the group by, we summed the different, no, here first we looked at the group by, we grouped the closing prices by months, and then we saw what it looks like, and then total volumes per year. Again, here we summed all the volumes in all the years and looked at it and grouped and all that. And then our performance analysis here, we were just looking at the minimum and maximum values to help us see the range of prices and identify any extreme values. And we looked at that. Let me just look at the query for that once again so that I see the insights we might have derived from that. Yeah, that is what we did here, to look at the extremes, and you realize there's a point where we started with a minimum of 0.00, and the maximum opening price was 32.75. We looked at how the minimum trading volume was 86,800, and the maximum volume was that. So something else we were to look at is volatility, which we did by looking at the standard deviation. We looked at how all these different trading, the opening, closing, and the low and high, and also the volume deviated from the average. And then also we identified the extremes by looking at the highest and lowest prices, and also looking at the above average volume days. Now, do we have any questions? if you have questions before we call it a session, and before I get to the assignment, if you have any questions, please